Aditya Welekar, who's been tracking the metal sector very closely at Axis Securities, is with us right now. Aditya, what do you make of the statements coming in for the minister? And do you think if the import duty is increased from 7.5 to let's say 10 to 12%, would that be enough to boost the domestic consumption?
Yeah, so currently on the current spot prices, if we look at the import parity, the domestic HRC prices are trading at almost 8% premium to Chinese steel prices. So if they increase the duties from 7.5 to 12%, then that premium falls to almost 4%. But still, even if they increase the duty from 7.5 to 12%, Indian HRC prices still trade at a premium of 4% to the Chinese prices. So it will be a helpful and sentimentally positive step. But given the quantum of fall in Chinese HRC prices, the Indian domestic steel prices are still will be at 4% premium even after increasing the duty from 7.5 to 12%. So that's the back of the envelope calculation we have done.
So I believe the recent channel checks did indicated that JSW Steel had increased the prices by around 750 to $1,000, not 750 to 1,000 rupees per ton. But if that is true that China has been dumping steel at lower prices and demand is not that great, then how is companies getting this confidence to increase the prices?
It might be a slight relief in the steel sector post this monsoon. Once this monsoon is over, there might be some pickup in the domestically. If you see the domestic steel industry is still strong. So in the first 4 months of this fiscal year, 15% domestic steel growth is there. And post this monsoon, there might be some pickup in the construction activities. Based on that, some of the steel mills have taken some price hikes. But if the China continues to dump, then the pressure on the domestic steel prices will continue, and that will put upward pressure on these domestic steel mills to increase or to increase any further steel price hikes. So ultimately, the positive demand or positive trigger should happen in China, and if that happens, means if the post the monsoon, if there is some pickup in industrial activity in China, then that will be a key positive trigger for the sector. And so far, we have seen that that trigger is yet to happen. The recent PMI prints from China are in the contraction zone at 49.1, which is below 50. So we have to wait and watch post this monsoon how the Chinese construction activity picks up. So far, they are not. There are no indications of any stimulus from China. So overall, the outlook is uncertain and on the slightly on the negative side.
So on the one side, we are seeing that China has been dumping steel at lower prices in the country. On the other side, we are also seeing that raw material prices for steel companies have been falling. So what is the kind of headroom that these steel companies might have at this moment to compete with the Chinese products?
Yeah, so if we look at the domestic steel players in second quarter of this fiscal year, we might see some contraction in steel spreads because of this fall in HRC prices, partially offset by the decline in the coking coal and iron ore prices. What we can make sense of, the spot steel spreads are still down if we compare it on month basis. So that will translate to lower spreads in second quarter of this fiscal. So the upside trigger or the relief for the steel mills will only happen if there is some increase in the pickup in activities in Chinese steel prices, as I said earlier. So the fall in iron ore and coking coal will be more beneficial for non-integrated steel players like JSPL and JSW Steel. Coking coal is now below 200 and iron ore is now below 100. So that's providing some relief to steel spot spreads. But the HRC prices are down. So overall, the spot spreads are down.
Yeah, point taken. But Aditya, given the fact you're talking about the headwinds from the demand from China, etc., dollar index is something which is also very volatile. What's your final pecking order on the equities and the stocks? Is there any fresh recommendation of a buy, or most of them are sell right now? What's your recommendation on the individual names?
So we have a negative outlook on steel stocks. So we have a hold rating on Tata Steel and SAIL. We are positive on non-ferrous names like Hindalco and Hindalco. We have maintained our buy rating. Nalco we have maintained hold because of because the smelters at Nalco are already operating at peak capacity. So only Hindalco in our metal pack we have maintained a buy rating.
Only Hindalco that you're positive on right now. Thanks, Aditya, for making time and speaking with us. But we are not done discussing the entire commodities pack. Crude is, of course, something which everybody is watching out for. We'll put the spotlight on that after this very